Of course.
All right, my next guest points to several potential sources of volatility in the coming months, and it doesn't only have to do with the calendar. We bring in Kevin Mahn, Hennion Walsh Asset Management President and CIO. Kevin, you see all of these as factors that could really shake up the market,
yes,
and that investors need to climb a wall of worry posed by all of these concerns.
Yes.
What is the most important area to be watching right now?
Obviously, the largest overhanging geopolitical risk right now is that
Iran.
there is no resolution with Iran. The Strait of Hormuz remains closed, or at least limited, and that keeps oil prices above $90 a barrel, keeps gasoline prices as high, and prevents the consumer from spending as much as we need them to continue to grow this economy.
That's inflationary.
That's inflationary.
So is the AI trade, especially with this debt that the AI companies are taking on. Jason, where I think he explained that really well.
Yes.
My bottom line on that was oversimplifying it, that the debt is healthy, that big hyperscalers and AI companies are taking on. What are your thoughts?
Yeah, I still contend, if I could use a baseball analogy here, Lauren, that we're just in batting practice of a doubleheader as it relates to the AI revolution. Batting practice is the
We haven't even started the game.
We haven't even started to play the games yet. We still need to build out the infrastructure necessary so that AI can ultimately transform society and improve the bottom lines of all the companies spending the billions of dollars. But we're going to need to be patient to see that ROI. So if you want to find the investment opportunities today, continue to focus on who's receiving the money, not who's spending the money.
So many people, like the bank of Nvidia, if you will, making all of these deals with the PE shops and the banks to make sure their customers have the financing to buy their chips. It just seems awfully circular.
It is a circular financing rut, if you will. But that doesn't mean there's not going to be winners and losers. I think the bigger risk here is those who underspend or don't spend at all, as opposed to those who may spend too much or take on too much debt to ultimately transform their bottom lines. It is a fair balancing act, though, and that's why you need to build a diversified portfolio, not just try and pick one or two winners.
Then there's Jensen Huang.
Yes.
And Nvidia next week, I think $91 billion in revenue in the past 3 months is the expectation. But look, if it's not $100 billion, if there's not a big beat, does Nvidia get sold?
I don't think it matters. I think they're going to have record earnings. I think they're going to beat on revenues. They're going to beat on earnings, and they're going to guide higher once again. And the street's going to say, oh, hum. They continue to do this. It's not enough. Because people keep poking at this perceived AI bubble, almost hoping it's going to burst. And they're wrong to do so. And Nvidia sits at the hub of that AI ecosystem. So if they're continuing to grow earnings, they're continuing to grow revenues, they're continuing to guide higher, that's good for the health of the AI
Who's
revolution.
their biggest competition?
I think it's multiple prongs right now. If you want to just focus on semiconductors, well, Broadcom is a huge, huge competitor to them. But they're also in the data center business now. In fact, last quarter, over 80% of their revenues came not from chip sales, but data centers. So they are diversified.
What about China?
I mean, that's an incredible opportunity for them, but I think there's tremendous more opportunities here in the U.S. And the partnership that they put in place with Taiwan Semiconductor to help them build that fabrication plant in Phoenix, Arizona, and they're going to build another one, is good because it onshores the production of their chips here in the U.S.
And then they are favorable as a truly American company.
Absolutely.
Kevin, that was a really good answer. Okay, let's pivot away from tech, away from Nvidia, to aerospace and defense. You like Lockheed Martin, RTX, and Moog. Why?
I do. So if you follow the money, and this has been a mantra for me for the 30 years I've been on Wall Street. I know that surprises you because I look so young. But if you do. Well, thank you, Lauren. But if you follow the money into where all the money's being spent, it's not just AI infrastructure, it's also aerospace and defense. Lockheed Martin, they're actually involved in Sikorsky helicopters, the F-35. We have RTX. They have Pratt & Whitney. They have Collins Aerospace. And, of course, Raytheon, their interceptor missiles. They were just awarded a big contract, multi-billion-dollar contract from the Navy. And then we have a company probably no one has ever heard of before, Moog Incorporated. They're involved in rocket propulsion, space vehicles, and also missiles and missile interceptors. So a blend of aerospace and defense.
Okay. So you like like those three. You brought up space, and
Yes.
I was thinking about this when you were talking about Nvidia. I mean, their relationship with SpaceX.
Mm-hmm.
I mean, Elon Musk has said Vera Rubin is like the best chip there is.
Yes, yes. And anything that Nvidia touches, they have the Midas touch, turns to gold. So certainly the blessing from Jensen Huang and Nvidia on SpaceX bodes well for Elon Musk. Not that he needs it, because he's the Willy Wonka of our times. But if you're looking for opportunities in space, there are other companies that are profitable today, didn't have a multi-billion-dollar operating loss as recently as last year, and are involved in the same technologies that Elon's looking to build. So if you want to be in space, look to companies like GE Aerospace, Helmet Aerospace, Moog Incorporated, and even companies like Lockheed Martin.
Because the data centers are going
Orbital data centers.
Up there.
Not today, but eventually.
In our lifetimes, even though you look young,
yes,
it's happening in our lifetimes.
That's a good thing to end on, young.
Kevin Mahn, thank you very much.